Hey guys, couple of things to discuss in this video. Number one being the Bitcoin short term. The weakness we found in yesterday's chart has developed and it has gotten significantly worse, unfortunately. We do have compression on the short term chart as well, which means we will be making a move quite shortly. And we do have some new patterns that we've identified there, all of which gives us a pretty good conclusion of which direction the price is going to go based from a TA metric. We also do need to look into the fact that the S&P 500 and the traditional markets in general have rejected from their major resistance line. We need to look into the fact as to whether that rejection will maintain and whether it will drag Bitcoin downwards, or whether there is a chance that could actually break through and break a 50-year trend in relation to interest rates and the S&P 500 bottom. But we'll get into all of that in a second. Before we get into the video itself, we need to discuss the VIP group. If you're interested in becoming a VIP member with the Wolves Crypto YouTube channel and getting trading signals on Telegram, you can do so using the pinned comment below. We've also got a Crypto Academy course which teaches people how to become traders in a university type format. And again, you can check that in the link description or pinned comment below. Thanks for watching the video. Let's get into it. So starting with the daily chart, what we can see just off the bat, just ignoring all of the smaller, shorter term lines, because we're going to look at all that in a second, we do have the longer downtrend line. This is something I start my videos off with very frequently because it is very much worth talking about. This is the trend reversal line, okay? That's very important. May, it's stemming from May, this yellow line here. In fact, I'll make it a different color so you guys can see it. I'll make it blue, okay? Stemming from May, comes all the way through the wicks here, comes all the way through the wicks in November again and August, and then extending all the way through. It's currently at the point at around 20,000, and you can see if we are going to come up to that point and test it, it will probably be below the major resistance lines. You can see how many resistance lines we have between 19,600 and 22.6, because we spent a lot of time in that region. We spent 5 months consolidating that region, and so when we do test that blue line, breaking it will lead us into a point in which we're retesting the bull market support band as well, and also retesting some of those red resistance lines. And so that means, in my opinion, that line, that blue line there, breaking that will lead to a trend reversal, okay? And I do believe that. And I have based up my Wolves Crypto buying plan off of that. We've already bought 50% at 17 to 18K about a few weeks ago, a month ago, whatever. And we're going to be planning to buy the other 50% at either the weekly close above the bull market support band, which would coincide with a line breakout above that blue line, right? Bull market support band's right here, or a drop down lower to 13.8K to 11.5K, which is the worst case scenario that I don't see as necessarily very likely at this point. I've kind of changed my view on that over the last month or so. I was thinking back in October-ish that 13.8K, 11.5K was likely. At this point, I'm actually more convinced that the bottom is already in that 15K region. Now, it's very much worth noting that I'm not convinced enough to change the buying plan. I'm not convinced enough to just buy here. I'm still waiting for that trend reversal to be up 50%. So it's not something that I'm completely conclusive about, but it is something that I am speculating about at this point in time. With that said, even though I just said shorter term bottom, the bottom could be in at 15K. I do think the short-term chart looks kind of rough right now. And this is something I discussed quite extensively in yesterday's video, and we need to expand on it now because more has happened and there's a lot more to look at. We've identified a couple new kind of charting patterns here. Okay, we did have this downtrending channel formation. It almost looks like a wedge. I guess it is a wedge formation. These dotted yellow lines form a descending wedge formation. Channel wedge, whatever, it's not really converging too rapidly. The point is we did break it to the upside, and those lines will act as support now because they acted as resistance a lot, and now they are support lines, and so we do have support below. But we also, within that, and in the even shorter term pattern, and this is forming since the 20th of November, we have these two solid yellow lines on the outside forming an ascending wedge formation, which is not good. We also have within that ascending wedge formation, descending volume from this entire upwards trend. The upwards trend started on the 22nd of November, and ever since then we've seen slightly descending volume. You can see that volume's trending downwards as we move upwards in the price action, which is not very good. It means that the higher we go, because we're in an upwards trend, it means that the higher we go, the less buyers are willing to buy, right? In terms of volume and in terms of volume of the actual buyers itself. So volumes in cash and capital and volumes of buyer themselves, right? Less people are willing to buy the higher we go, which means the fair valuation of Bitcoin at this point in time, as seen by the market, is actually a little bit lower than where we are currently. And that volume chart really represents that quite well. We also, within this second, I know there's a lot of channels here, within this second wedge formation, we have a smaller, right? A smaller channel formation. In fact, this is an ascending, broadening channel formation which is a ascending broadening wedge formation, right? Where this bottom line is moving upwards, but this top line is moving upwards, and they're not parallel. They're moving away from each other very slowly. That is a bearish formation as well. On top of this, we are below the 17k resistance zone. It is a vague resistance zone that we've faced throughout this entire range here. And yeah, look, all that to say, including the RSI, Bitcoin's not looking particularly strong right now. We have bearish divergence in the RSI. We are still holding the uptrending pink line. So it's like we're showing weakness, but we haven't seen a confirmed breakdown. And I think we will be seeing that confirmed breakdown quite shortly. When do I think that will happen? Well, the ascending broadening wedge doesn't tell us that, because unlike a triangle formation, let me display this, unlike a triangle formation, which I'm drawing here, where you have an apex being the end of a triangle, being the point in which you will see a breakout before, an ascending broadening wedge doesn't really have an apex. So you can be in the ascending broadening wedge for a long period of time. So we have to use other metrics to see when Bitcoin will break out. And the metrics we're using at this point in time are indicators being the 50 SMA and the 200 SMA on the 4-hourly chart, which, as you can see, are converging quite rapidly towards each other. When these lines do converge and when these lines do cross, that will actually act as an apex in the same way an end of a triangle would. Meaning, these lines will cross at this point in time around the 9th of December, meaning we will be seeing a move on Bitcoin either up or down below this ascending broadening wedge formation before the 9th of December, which is in the next 3 days. And I expect that move at this point in time to be downwards. Okay, so pretty weak on the Bitcoin chart there for the short term, unfortunately. I want to briefly interrupt this video to talk about the BitGet Exchange. The BitGet Exchange has 5 times lower fees than Binance, which is the biggest major exchange in the cryptocurrency market on futures. It also has 0 fees on every single spot pair, so you can trade spot for entirely free, no fees included. It runs events. Right now it's got a FIFA World Cup event sponsored by Messi, the football player. It's got copy trading, strategy trading. It's got exclusive rewards and discounts in the rewards center. It's got everything you need for a trader using Exchange. This is the exchange I personally use as a trader for my everyday trading, and I highly recommend everyone does so at the Wolves of Crypto YouTube channel. Sign up using my referral link for exclusive rewards and discounts. That really helps out the channel, and I appreciate it. For my fans from the United States of America, you can sign up using this exchange with a VPN and use the exchange with a VPN and just sign up using my referral link like normal, and you'll be treated like a normal customer because this is also a non-KYC exchange. So make sure to sign up using my referral link in the pinned comment or the description below, and without further ado, let's get back into the video. But that's for short term, and it's worth saying that the short term doesn't necessarily answer the questions of macro. The macro questions are being answered, in my opinion, by the 4-year cycle. I think there's going to be a Q4 bottom by the 4-year cycle, date range trend triggered by the halving, 4 micro trends within the larger trend. I'm not going to delve into it too much. I think most people know what the 4-year cycle is at this point. Even if you're not a fan of a channel, even if you don't watch the channel, you've probably heard the word go around. Essentially, that trend extrapolated predicts a Q4 bottom, which means a bottom in December, basically, because we're in December right now. We could have already seen the bottom in November, in which case that was the Q4 bottom. It could extend a little bit into January, but for the most part, the macro trend does kind of predict the bottom's either in or going to be in quite soon. And so, you know, even if we break down from this ascending broadening wedge formation, we come downwards, we might find support on this line here, we might find support on this line here, might find support at 15k. You know, there's a lot of places we can find support in the short term. And, you know, another thing that's really going to toss up volatility that we spoke about in yesterday's video is, of course, the macro events that are coming up this month. On the 13th of December, we have, I think, CPIs on the 13th, and then on the 14th or 15th, we have the FOMC. I've just marked them in pink lines there. So in the next, 8 days, because it's the 6th today, right? So in the next 8 days or so, we will be seeing those major events. Each one of these events, and you guys can probably confirm this just by what's happened previously. Inflation data coming out, CPI coming out does cause volatility, and so does FOMC. The fact that both of those events are happening within a 48-hour period means there's going to be a massive amount of volatility towards the middle of December. And that kind of begs the question, and it leads us into our next topic of discussion, the S&P 500, because obviously these are the charts that are most affected by macro events. They're traditional markets charts, right? So Bitcoin, you know, is obviously connected to the macro as well, but the main thing that's connected to the macro is of course traditional markets. And traditional markets right now, as seen by the S&P 500, are rejecting from a downtrending resistance line that we've been seeing since January. Okay, we've seen a strong rejection from that line, and that is probably one of the reasons we've seen weakness on Bitcoin as we approach the top of the range. You guys know already, 17.7k, 17.6k is the top of the local range. That is where we saw the June low. Let's go ahead and delete everything on the chart so we can just kind of display this quite quickly. The June low here at 17.6k, bang, Okay, so this was a range, and now we've dropped below it, and we're seeing a range over here. If we manage to get back above 17.6K, we enter the old range, and this whole range here becomes a fake out, and we dramatically increase our chances of moving upwards. So 17.6K, very, very important zone. But you know what I'm kind of looking at here, and what I'm really trying to discuss at this point is S&P 500 rejecting from major line. Okay. Generally speaking, you don't see the S&P 500 bottom out until interest rates have started decreasing. In the orange, we have the interest rates chart. In the blue, we have S&P 500. The pink is where the S&P bottoms. What you'll notice is that on every single occasion in the last 50 years, we have not seen the S&P 500 bottom out until interest rates start decreasing. And interest rates are not decreasing yet. In fact, they're still rising. So the argument for the S&P 500 to be bottomed out is quite weak at this point in time. But there is a chance, okay? We are in a macro recession. It is a unique period of time. We've never seen the Federal Reserve, for example, raise interest rates so aggressively while the S&P 500 is correcting. Generally, while the S&P 500 is correcting, the Federal Reserve is actually decreasing interest rates. So we're seeing quite a unique circumstance here, and hence we could see quite a unique result. And so I'm really waiting to see, and it will be really interesting to see how these macro events on the 13th and on the 15th affect the S&P. Will it lead to a breakout? Will we see something we've never seen before? Will they break out of resistance and potentially confirm a renewed upwards trend, or will it just reject downwards like usual, like we've seen for the last 50 years? It's a big question. It's hard to answer. If you're going off historical data, you'd have to say the S&P 500 would go down further, in which case that would support the lower bottom argument for Bitcoin. And the lower bottom argument for Bitcoin, of course, is, as we've discussed at the start of this video, 13.8K to 11.5K. That is kind of the nearest support range on a macro level between those two red lines. And of course, there is a chance we go down to that point. But again, I would like to just reiterate what I said before. I do think at this point in time, there is a decent chance that the bottom is in. Right? I do think there's about a 60% probability that the bottom is in on there. I'd say it's more likely than not. It's just the shorter term charts are a little bit complicated right now. It's unnerving to a certain extent to see the bearishness play out in the shorter term charts as we enter the top of the range. I do think that Bitcoin will probably remain in this range between the 15K region and 17.6K until those decisions come out towards the middle of the month. Okay, next 8 days, I do think Bitcoin will not make much of a move. Generally, before FOMC or before CPI, you do see pricing in, okay, and you do see stagnation to a certain extent, and I think that's what we'll see now. I think we'll see stagnation, and I think we'll see Bitcoin mostly go sideways and mostly just continue to be in this range until those events come out, until there's more clarity, because people wait to make decisions, right? The price moves up or down based on what market participants do. If market participants are bullish on the market, they're buying, the price moves up. If they're bearish, they're selling, the price moves down. What you see before major events, especially in times of massive uncertainty like right now, is buying and market participants just don't do anything. And we can see that already by the volume not really doing much, right? Low volume throughout this entire range. Market participants are simply waiting for more evidence. They're not confident enough to make a decision at this point. They're waiting for more evidence before they make a decision. I think the FOMC event and the CPI event will be the evidence that people need. So overall, short term doesn't look very good. We will be seeing a move before the 9th as per the 50 SMA and the 200-week SMA. That move will be a short-term move. I don't expect it to do massive amounts for the range. It could lead to a retest of the top of the range, but ultimately we are just waiting for those middle of the month events. S&P right now is a little bit sketchy. It is rejecting, and we do have a lot of macro evidence from 50 years of data to suggest it will continue to correct. But ultimately, we do need to remember it is a unique circumstance. We could see a unique result. I wouldn't rely on it, but it is possible at this point in time. So yeah, thanks for watching, guys. Hope you enjoyed the video. We'll catch you tomorrow. Hopefully some more progressions have happened in the shorter term chart so we can get into that. Let's get it. Thanks, guys.